Okay. Hey, everybody. I have met all of you. It was a pleasure to meet all of you. I thought we'd start with just some introductions. And then I've got an interesting format of questions that I'm going to be asking, and I'll invite one of you to sort of lead the discussion, and then everybody sort of jump in from there. So, Brian, if you want to start, just give a minute of background about yourself. That'd be great.
Sure, Brian Sainsbury, CEO of Aegis Hedging Solutions. Been here 5 years. We help companies manage their cash flow risk that's impacted by commodity and rate exposures. But 22 years in broader industry, and we'll talk more about that, I'm sure.
Great, Les.
Hi, everybody. Les Wretchen, Chief Operating Officer of Pros. I like to say Chief Outperform Officer of Pros. I've been in that role since middle of last year and was on the board of Pros for 5 years prior to that. Pros is a limited partner in HX Ventures. We're based in Houston, Texas. PRO, our ticker symbol on New York Stock Exchange, stands for Pricing and Revenue Optimization Solutions. So we've got over 1,200 people worldwide. It's a global company. Over 600 of those are in Houston. So we're pumped about Houston as being our hometown. It was founded there. We've got our average tenure there is over 5 years. We have a new building with a beautiful sign in Upper Kirby that we've never stepped foot into due to the pandemic. So really, really pleased to be here. Appreciate the opportunity.
Thanks, Les. Kim?
Hi, yes, I'm Kim Rath, one of the founders and CEO of Topple. We refer to ourselves as an ESG technology company. So what that ultimately means is we actually help businesses track all instances of their ethical and sustainable practices in their supply chain, which kind of opens up in this conversation. The production histories are being recorded from unbanked producers, and it allows them to have alternative credit scores, ways to get financing, insurance, and at the same time, that provenance story also allows you as the end consumer to start seeing how and where your products are made. We are still very early stage. We just had our first venture funding round. So we are a startup here out of Houston, Texas, started out of Rice University, and this is kind of how we're involved with the HX community as well. So a lot more to discuss, but excited to be here. Thank you for having me.
Awesome. And Sheil, last but not least.
Hi, guys. Sheil Tile. I am the founder of a venture capital firm called Amplo. At Amplo, we believe that the biggest companies in the world are created by entrepreneurs, not motivated by money, but motivated by solving a really big problem. And I'm from Houston. I went to elementary school in Houston, moved back when I started Amplo. And, we do a lot of FinTech. We do a lot of software. Really, we believe that a number of different sectors are needed to transform the world forward, and FinTech is one of them. And so I'm just really excited to be here and chatting with you guys.
Amazing. I guess I should have introduced myself. I'm Tim Beamer. I'm a partner at Lead Edge Capital. We're a growth equity fund based in New York. Very fortunate partners of a bunch of amazing software and internet companies. And HX Ventures is an LP in our newest fund, and we're certainly thankful and proud to have them involved. So the title of our panel today is Game Changers, Houston is Shaping the Future with Innovations in FinTech. I thought the first part of our discussion should be more geared towards the venture and entrepreneurial community. I thought it'd be fun to talk to people who are sort of on opposite sides of the spectrum as it relates to definitions of product market fit, raising capital, et cetera, right? So for me, the first thing I was curious is, how do you think about product market fit? How are you defining it either as a company and or as an investor? And then how do you think about this trade-off between scale and growth versus profitability and unit economics? And I'd love for Kim and Brian to sort of, start us off here.
Kim, why don't you start?
So I missed a little bit of that. So just to understand like the question, I don't know if it was my internet that cut out there for a bit. So I might say push it to someone else so that I can just understand the question.
Sure. Why don't we start with Brian? And I'll repeat
Yeah.
the question, by the way. It was just about how do you define product market fit internally as a business? How has that evolved over time for you? And then how do you think about this trade-off of investing in growth and scale comparative to profitability and unit economics?
Yeah, so I'll start and try to keep it brief. There's a lot in that question. We started our firm, and I think an important message that having been involved with a really big company, Aon and some of its assigns for 22 years, and then working as a startup entrepreneur, we had a couple of goals early on, and one was to solve one problem to get started, and so as it related to product market fit. We saw an opportunity to sit ourselves down in the middle of some complex transactions and make consumers much more well informed when facing off with the financial community. And we always believe if we can solve one problem, then the next opportunity will present itself. And so we never started off with an idea that we were going to become a FinTech company. We started off with an idea that there was a problem to be solved, and that we were smart enough to understand the next one that we could solve. And so we really focused there, to make sure that we took one step at a time. We also, and Tim and I laughed about this previously, we decided we were going to be profitable from early stage. And in fact, we were profitable in month 2 of our existence and have been more profitable every quarter since then. And so that I think that's fairly unique in the startup community. But it was something that we put on our goals, that we didn't want to be big consumers of capital early on. That we knew how to scale. I had taken a business that was formerly Hewitt Associates, now Alight Solutions, and we had taken it from a couple hundred employees to 40,000 around the world. We knew what that looked like, but we knew that required a number of important decisions, and also being experienced and being in an entrepreneurial seat, you knew there were critical investments you needed to make early on. You didn't build on access databases. You found the important investments and made sure we overweighted there on things that would allow us to scale in the future, but used our capital wisely. And now we're in a position where we generate a tremendous amount of cash flow and have the ability to pursue a number of market segments and invest in a big way in sales and marketing and other things that we just believe are the right way to approach it. Now, we may not have been rewarded the same way that Airbnb and others who've managed to lose billions of dollars and attain massive market caps. But we're really proud of the way that we've built a profitable company that and paid for every investment that we've made out of cash flow.
Yeah, I will actually latch on to Brian's finding a problem and actually solving the problem. So one of the things, from a background perspective, I actually come from diamond mining, agricultural background out of South Africa. And one of the biggest things that I had witnessed and actually experienced early on in my, career in nonprofits and development finance and a few other situations where we started seeing a bunch of different groups building technology, like over-engineered airplanes in hangars, trying to solve certain problems that weren't looking for a problem to solve instead of actually looking at the specific problem that is at hand. And in this case, the problem we had seen is the need for really being able to claim ESG certifications. And that was actually very early on in 2014. We had, this was around the time when Reuters came out with the Nestle research, where there were children in the supply chain that Nestle couldn't really prove that these children were in their supply chains, but they were making certain claims about ethical and sustainable practices. And it was the same for a bunch of other companies around greenwashing. And it was around this time when I actually met my 2 co-founders that were also at Rice. The 2 of them had already started building a company, a payment application using the Ethereum blockchain, and had actually got introduced to the blockchain space very early on. And so when I came in with this, other worldview of saying, how do we actually solve some of the problems that we're seeing regarding, tracking claims from source to sale? How do we actually connect the most disenfranchised individual on the one side of a network with the biggest corporation on the other side, but via same censorship-proof network, so that we can start communicating information in a symmetric way, so it's not information asymmetry in that situation, and that can allow financing and insurance to run back to these producers or miners on the ground. That was kind of where we started this company. We actually said, we looked for about 2 years and didn't see anyone in the blockchain space saying, let's build a purpose-built blockchain that has unique features and functionality that caters to the needs of the actual customer. And so it took us, within the year of actually starting the company, within 9 months and less than 250K spent, and talking about companies spending millions to build blockchain technology, we were able to actually launch our first production ready version of the Topple blockchain. And just after the launch, had our first user, which was a living wage farming certification group, tracking their certification claims all the way from Indonesia to the Netherlands for a spice brand. And that kind of just scaled from there. And that was one of the biggest things, was then going after different use cases. We quickly had a diamond platform after that. From there was a voluntary carbon exchange that started using this infrastructure to help them make certain certification claims. And from there, to be honest, there was a big lesson learned. We learned how little people knew how to access blockchains and what that means to actually use a blockchain. And so we spent ample time in 2019 at the end, and 2020 really thinking through, how can we, this private plane that we created to allow people to fly on, how do we not handhold people to this plane? How do we create a commercial airline? How do we actually launch the actual, ticketing all the way through using a blockchain with APIs? And that's actually what we're launching next month, is a blockchain as a service product that uses our technology, so that now what we started going after is any tracking device, traceability platform that is currently trying to add trust to their traceability, or essentially proof to the ESG claims that are being made in these reporting platforms, is now for them to be able to add that feature through APIs and be able to track the proof of what's going on throughout their supply chain. So it took a little bit of an evolution, but the whole idea was, from the beginning, there's a problem in really trying to prove these claims. How do we solve that? And yes, blockchain ended up being the right technology for this, but it was a purpose-built blockchain, not one of those out there that we started to try and plug in to this type of solution. So I would say that's kind of where our evolution came from. But very much I don't believe in wanting to spend too much money on something before you actually find users or usage of the product.
Yeah, Kim, we had a fascinating discussion. I think your history from background in the academia and a lot of the things that you did in emerging markets and sort of finding product market fit was really sort of fascinating to understand. Another thing that you said to me that really resonated was, how do you take really complex things and simplify them for the outside world, right? What does that look like, and how do you communicate that story? And that gets me into my next sort of question and topic around capital raising, right? So this is a Houston-based or Houston bent to sort of our audience. And my curiosity is to understand, both from the investors and the operators on the table, how do you think raising capital differs by geography, right? So Les, you're from Canada, Shil, you're from Houston, but invest sort of around the world. Talk a little bit about how you guys think about underwriting companies or raising capital, depending on, are you East Coast, are you West Coast, are you centralized, are you emerging? What are you underwriting differently depending on where you're looking? And then Kim, I know you had some interesting sort of experiences with different investors from the coast. So would love to understand the different types of questions and the different dynamics that you face, sort of dependent on where investors came from. So Shil, if you want to start off.
Yeah, happy to. So I grew up working at two different venture capital firms on the coast. So I feel like I started my career on the East Coast and learned about how to not pay high prices and high valuations. And then I moved to the West Coast, where I learned the only prices to pay are the high prices. And then now I'm in Houston, and it's a little bit of all of the above, I feel like. I will say my answer to your question would have been very different pre-pandemic than post-pandemic. And I think what's interesting is the pandemic. One of the perhaps few positives of the pandemic is that it's leveled the playing field for entrepreneurs and for capital raising. You look the same on a Zoom, whether you're sitting in Houston or whether you're sitting in Palo Alto or in Lagos, Nigeria, or in India. And so in some ways, it's democratized access to capital. And so I do feel like over the next few years, people have gotten used to the last few months. And I do actually think, therefore, it will open up the universe of potential capital available to an entrepreneur in Houston. From my perspective, during the pandemic, we funded an entrepreneur in Houston that I actually never have still yet to meet in person. Because I didn't care that he was in Houston. It was just, it happened to be a great company. And the founder was living in Houston, but he had other employees living in different parts of the country. And so I think that, from an entrepreneur perspective, it's really democratized. From an investor perspective, I feel like there will have to be some overcoming of biases, so to speak, that I think is already starting to happen, where, I think there used to be a bias where if you move your office to Silicon Valley, your valuation increases by 20%, 30%, or whatever. And I think that bias will have to change, and I think is already starting to change. But I'm optimistic for where the investing community and by extension, the entrepreneurship community is headed.
Awesome.
Yeah, that's great. Great perspective, Sheil. Thanks for sharing that. And even though I don't sound it, I am Canadian. And my hometown is Ottawa, Canada. And there is I'm a venture partner in a couple funds, one that was Silicon Valley based, Austin based, called the Entrepreneurs Fund. And then Mistral Ventures is up in Canada. And of course, now Pros is a tech company in Houston. We're an LP. And I think I love the way you put it, Sheil, in terms of democratizing, because 2020 was a catalyst for change. And the virtual wave has made it so possible for innovation to come from anywhere around the world to solve what Brian talked about, right? Which is this: I've got to have go to product to solve a problem. Then I got to be able to go to market and then go to scale. Now, in terms of Canada and Ottawa, one of the jobs I had prior to this was I was the COO of Cognos, right? Biggest software company in Canada. Proved the point that you could be a global leader in Ottawa, Canada, with 1 million people. People don't even know where Ottawa is. They say, where is that? Is that the 51st state? I mean, you don't really know, right? And now you got companies like Shopify out of Ottawa, Canada. Shopify has got one of the top valuations on the planet, has proven the point of how to go to product, very focused in terms of being a retail operating system for the mid-market, and then going to market, and then being able to go to scale with a business model that they could just add to, right? And they've got over 1 million merchants now. Now, Canada is a bit more, Sheil, to your point, a bit more risk averse, right? When I was a public company CEO in Canada, if you're trading on the Toronto Stock Exchange as opposed to NASDAQ, the investors are a bit more risk averse. They want what Brian talked about. They want profitability. They want EBITDA. They want cash flow. As opposed to the Valley may do the happy face of, hey, I'm going to invest to grow, right? I'm going to cross that traction gap, and I'm okay with the happy face of investing to grow. So I think there are different styles. I think Texas, a lot of people are moving to Texas right now. I think Houston is an awesome place. I think Rice, we're doing a bunch of partnerships. You got all the things lining up, right? You got the academia environment. We've got a strong partnership with Rice. Some of our execs teach in the business school. They teach next generation pricing in the business school and some of the tech classes. We do our leadership training with joint program with Rice. So I think the stars can line up well now in various places throughout the world. And I do think that there's just great examples now from all corners of the world. In terms of the pandemic, though, the pandemic environment now being different, I think the rate and pace has dramatically changed. You look at the notion of omnichannel commerce, you look at customer experience, you look at what's happened, you look at online commerce going from 5% to 15%. It took a decade to do a 10-point movement. It took a quarter to go from 15 to 25%. And that's the Shopify thing. Things got 40 times faster. And so the people that are involved, if they figure out that problem to solve, they've got a market opportunity, they've got momentum, they've got a management team, they create a moat, they create a model, bam, you can make that happen anywhere. I love the virtual wave, by the way. I love being on, like right after this call, I'm gonna be on the phone with my Asia Pac team. We can do an executive briefing anywhere in the world with, the whole executive team on the phone. You can engage. I can talk to Brian. I can talk to, people all over the world like that. Just flick the switch and you're there.
Yeah, democratization and access, I think, is an amazing lead into our next topic, which is, I'm going to now sort of transition a little bit into themes of FinTech and how you each respectively think these trends sort of are going to play out over the coming years. One thing that we've been the beneficiary at LeadEdge is what I will call sort of payment facilitation or PayFac or sort of democratization of payments. Kind of what you were talking about, Les, is it's easier than ever for a company to embed finance into their product offering, right? And they're able to leverage volume and scale in order to sort of drive added revenue per customer. I'm curious, in your business, how have you seen that take shape, and what markets do you perceive are going to be some of the best beneficiaries of this trend over the coming years? And Les, I thought we'd start with you.
Okay, so Pros as a company isn't necessarily in the FinTech space, but I'm going to comment on, because I've been in FinTech. I've been the CEO of a FinTech company called Solace, which was all about event-driven, data movement at the speed of light, fast boys kind of stuff, where the new currency is time and trust. And the common thread right now is, when you think about the customer, it's got to be seamless, frictionless, personalized. It's got to be an unbelievable experience in real time. And that then involves omnichannel. It could be direct to consumer. It could be consultative sales. It could be negotiated, non-negotiated. You have to do business the way the customer wants to do business. And that's what I love in FinTech. Some of these things that are taking place, like you make products available to investors, alternatives in a fractional environment, these e-marketplaces that you can plug into. And so where we come from, and it's all, it's hybrid multi-cloud, which is another democratization piece. It's AI, which I like to say augmented intelligence. It's augmented because you still have, it's that beautiful, the mix. And it's trusted ethical AI, which is a space I've been involved in for a long time. These capabilities can be used in ways that are just incredible. Pros, my company, which we're doing real-time dynamic pricing, 1.7 trillion transactions last year. Every time you book an airline flight, when how that price changes depending on supply, demand, and the competition, that's Pros. That's our company based in Houston, right? Now, you can exploit these capabilities, this combination of things, of e-markets, of customer-driven journey management, of AI, ML, cloud in partnerships, because you can't necessarily do it all on your own, as it applies to so many different examples in the FinTech space. It's mind-boggling, everything that's going on. And you can add capabilities, step by step to grow, to get this go-to-market, go-to-scale piece. So I know that's kind of a wide-ranging answer here, but I think that's what it's all about. I think Brian mentioned from the beginning, I'm going to solve a problem in a superior way. I'm going to nail it to scale it, and then I'm just going to add to it. So with that, I'll stop there.
Brian, anything to add there?
No, I think that's incredibly well said.
Awesome. So I couldn't agree more. My next question or theme was around financial education and participation by the masses, right? So I think, growing up, my parents, part of the American dream was owning your own home, right? And I think as again, this continued democratization of access to alternatives to the markets via things like Robinhood, the average sort of millennial is thinking about home ownership and asset accretion very, very differently. So I'm curious, what is your view on what is that next participation of own my own home for, as the American dream for millennials? What are they going to be investing in? What are they going to care about? How are they going to sort of put their money and make it work for them? And Sheil, as an early investor in Robinhood, I thought you'd be a great person to opine.
Yeah, I mean, so I guess my take on this is, Robinhood was started because it was inspired by the Occupy Wall Street movement, where in this country, if you were rich, it was easier to get richer. But if you weren't, account minimums were too high, brokerage fees ate up a higher portion of your net worth, et cetera, et cetera, et cetera, right? I mean, a $7 commission doesn't matter if you have $1 million in your account, but it matters a lot if you're trying to trade $100. And so that was the premise. They just thought that, this was fundamentally un-American and unfair, that in this country, we have barriers when the cost of trading is zero. It's actually net negative ever since trading moved online. And I think what we've seen with Robinhood is, and a number of other companies in the space, frankly, is there is when you eliminate the barrier of a small fee, it just completely transforms how people view accessibility. And so when I used the word democratization earlier, that actually stemmed from my experience with Robinhood, because they were trying to democratize access to financial markets. And I think what we've seen with Robinhood is it's not just stocks. There are other things that you can continue to break down barriers for. And as you continue to break down barriers, participation increases exponentially. So it started as whole stocks, and then it went to options, and then it went to fractional shares. And the uptake of fractional shares on Robinhood is enormous. And then it went to crypto, and then you sort of can see where it's continuing to go and go. I just saw the other day a pitch for a company that is doing the same thing for collectibles, whether it's sports cards or anything else that you may want to own a piece of one day as you diversify your asset base. And right now, millennials are such a small portion of overall net worth in this country. I mean, most of the wealth in this country is not held by millennials. It's held by, 1 and 2 generations above. But so long as you believe that the millennial generation will follow the same trend as every previous generation, which is they will increase their net worth over time, then you have to believe that their buying power is only going to increase and their interest is only going to increase.
And I want to kind of second you on the asset class creation, right? Like us being in a world where ultimately what we're enabling for a bunch of the platforms that are that are essentially enabled to be powered by Topple, but are also in the process of being able to, is, new asset classes. It's a carbon sequestration actual coin, right? It's the ability to actually think further than just carbon sequestration, to think about agroforestry, to think about the SDGs as a whole becoming an asset class, and really thinking about the sustainable development goals that we're trying to achieve by 2030. Can I have a multi-asset portfolio where I actually have every single 17 SDGs represented in that portfolio? So could I look at the ESG pillars and put these SDGs underneath those pillars and say, can I actually identify social and economic impact that I'm making? And could I track that back? So I always say, what we were trying to enable is essentially to look at the like you would look at the periodic table, you would look at quantified measures for all those periodic table elements. You'll do the same thing for the SDGs. There will be value that is associated, and you'd essentially want to invest and actually monetize the impact that you're making. So that's kind of where the, tracking ethical and sustainable claims, you first have to track and trace certain behaviors before you can start transacting on those behaviors. And I believe that that's where the millennial consumer-driven, value-driven consumer that votes with their wallet, that votes with their investments, saying, we would like to see a net zero, multi-asset portfolio. How do I do that? How do I actually diversify into new asset classes? And that's where crypto becomes interesting too, right? How do I actually know that crypto is backed by something, or what's the stable coin look like? There's just so many conversations in just the blockchain space as a whole, because blockchain just opens up a whole new world. People think crypto and they think Bitcoin, but they're not thinking about the ability, like a carbon credit is also just a tokenized cryptocurrency, right? So you can think about any social or ethical practice being tokenized and being able to track that if you're able to actually identify what that source is and what the actual measure is around that in the standard. But yeah, I definitely think there's so many new asset classes that are going to come about because of the fintech revolution. And then, blockchains just enable so much more for the fintech enablement that already happened.
Yeah, Kim, you said something when we chatted that has really stuck with me, which is blockchain is everything you don't know about the money and everything you don't know about money and the internet combined into one. That's how I feel about blockchain. So I'm curious, as someone who has spent a lot of time in emerging markets, and part of your guys' solution and offering is around helping supply chain partners build credit, right? Build credit worthiness so that they can have insurance, have leverage, have things like that. What are some of the innovations that are happening in emerging markets in fintech that some of us may not be aware of because they have different barriers to entry, or they have different sort of consumer participant dynamics, or different sort of government affiliations that we may not be familiar with? And then we can open up to the group at large if others have perspectives on that.
Yeah, so I was actually in a really awesome call yesterday with Mercy Corps. So they have this new initiative called Finex Initiative, where they work with a lot of, very rural farming communities and thinking about, how do you bank the unbanked? Very fascinating conversation. But one of the biggest things that I've seen to date is, as exactly in the experience I've had in working in some of these countries, is we forget the technology leapfrogging that's already happened in these areas. We forget that they are already in mobile wallets, that they are already using, M-Pesa. In certain areas, we forget that, these groups are trying to find ways to even use their cell phone minutes as payments for things, right? So there's a lot of interesting innovation, especially in Africa, that has moved forward just because cash is such a dangerous thing to hold on you. It becomes extremely dangerous to just have cash on you. So it's the digital money side of this is really, necessary. Now, from some of the more tangible things we've seen in the supply chains, what is really nice is a lot of the, groups we talk to, and we're working on a partnership now where it's essentially it's a fintech company that supplies about 3 million plus users across Africa with mobile wallets. And so what they're trying to do is up that mobile wallet and be able to, plug into tracking the supply chain behaviors, the production histories of these different farmers, so that they can actually use that production history as alternative credit to create loan structures and insurance structures for these farmers. And so it's essentially working with fintechs in this situation to be able to track some of these alternative methods of credit. There's a lot of different ways I've seen for alternative credit scores. I do have to say that in the blockchain space, there's also really interesting DeFi, they call it decentralized finance, approaches that are helping you democratize finance and so much more. But I feel like the big thing will be for us to solve the information asymmetry problem. If we want to, like, instead of just doing microloans into these remote regions, like $100, $200, $300 microloans, we have to start solving the problem of actually knowing the information and being able to trust the information that we're getting, especially if we want to start funding very remote operations in different situations. So I think there's two sides of this. Is there is an institutional void that exists in most of these regions. So it's being, we're connecting the dots that were previously damaged by trust by using technology, but we are also just in a situation of information asymmetry is still the problem that needs to be solved. So how do you track that information? How do you trust that information for us to truly get to, unbanked populations becoming banked, or not even like from a banking traditional perspective, or just having access to, different types of networks of capital.
Sheila, I know you've made investments in Africa, India, and the payments space. Is there anything that you might add?
I think Kim's points are really good ones. If you look at the most valuable technology, actually just the most valuable private businesses in nearly every country in this world, it's a FinTech company. Actually same in the United States, if you believe Stripe is the most valuable company, at least amongst technology businesses. And so, in India, it's Paytm, and in China, it's Alipay. It's you can continue onwards. And each one solves its own problem, but they're all related. And I think I feel like the general notion is folks have leapfrogged computers, and it's all to mobile phones, and commerce is increasing. And so as long as you believe those two things are true, then each country will have its own dynamic as to how the payment is actually processed. But as long as you're long these economies, the tax is the payment. And those payments businesses will be very, very big. And so, we've backed a number of companies in different markets. We wish we had backed even more. We probably should have just backed everything we saw, and we would have ended up net positive, but it's, oh well.
Oh, well, is right. So the last section is going to be my favorite section. This is what we're going to get random. We're going to get predictions for what's about to happen in the future. And I'd ask that each of you respectively answer each of these questions. The first is, I think these panels are an amazing opportunity to let every listener know that they're not alone in whatever it is that they're facing, whatever it is that they're struggling. So you've all been incredibly successful in your own way. What is one thing that you thought at the time was going to be one of your biggest failures, and you were able to, with perspective and time, turn it into one of your greatest strengths and successes? And Brian, let's start with you.
Oh gosh, I wanted a second to think about that. Look, we made a huge investment, call it a year and a half ago, to do something that we don't believe has ever been done before, and sort of opening up a bilateral derivative marketplace with financial institutions, and partnered with a company. I won't say who they were. Invested a tremendous amount of time and money in doing that, bringing something to market, and it just wasn't working. And we didn't have the right partner. And I think when you're using capital early on in a business, it's so easy to continue to ride it out and say we're going to figure out how to make this work. And ultimately said, look, we've got to cut and run here and start over with a new partner. And we threw a year's worth of work in the trash. And 4 months later, we were in way better of a position than where we had left off. And I think the lesson I took away from that, obviously, you don't want to fail, but at some point you got to make the hard calls, and you can't hang on to an idea that isn't working. I think that was a huge lesson for me as a leader. And frankly, I think if I were in a bigger company with more access to capital, I would have made a different decision, right? You would have continued to follow that down the road. And so I think the discipline of having to be an entrepreneur and being a good deployer of capital really helped us to land in a good spot.
Thanks for sharing, Les.
Yeah, I think first of all, this has been a great panel. This whole diversity and inclusion is beauty. And we talk about, diversity being you get invited to the party. Inclusion is you're out on the dance floor. Some of the examples that Sheil gave in terms of this diversity in ethnic and country backgrounds is going to be an advantage for investors. Everything's been democratized. Everything is available. The open banking, everything just opening up. So one of the things that I think that you got to continue to do right, and one of the things Pros has done right, it was founded 35 years ago, husband and wife tag team, Ron and Mariette Westemeyer in Houston. What they've believed in always is you innovate. And you innovate and you care about people matter most, because that it's not just what they do, but how they do it, and then nurturing that, and that everyone's an owner. And if you're always looking to that next horizon, but as Brian said, like you may, fumble the ball a little bit, but the notion of looking to that next horizon in, like in our case now, and some of the bets that you make. So in our case right now, this whole notion of omnichannel and that different accessibility, whether it's e-markets, meta search engines, and just that whole spectrum of things and the capabilities you need to invest in to be able to serve that in real time is something that you've had to build up over years, right? We do 10 times more transactions than Visa does today. If you didn't invest in that, like some of these hard problems to solve, you got to make the bet, and you decide, what I'm going to do, and as important, what I'm not going to do. So your ability to do things now at cloud scale, all these things kind of add up. So I would say the key thing here too with FinTech is just the culture that you create, and just you got to get that right. It's just so important. And these companies are so much fun to work for, and they do such incredible things, but it's all about the people. It's all about encouraging the innovation. It's all about caring about them and really investing in them and growing them as humans. So that's what I would say.
Thanks for sharing. Kim?
I would say mine is personal. So just before I came to the US, there was this gap between my high school and coming to the US on a track scholarship. And the reason I actually came to the US was because I was really going back and forth about going to university. In South Africa, I had this big thing in me about actually going out and being hands-on service to the world, and being super passionate about a real teenager wanting to change the world. So I actually joined an organization, and so I took a gap year essentially before I came to the US on a track scholarship. But that was one of the biggest things I thought would be a mistake in my life. But that year I actually went to 18 different countries. I worked with an organization that specifically focused on development, finance, implementation in very rural areas in the world. I did tsunami rebuilding. I did mudslide rebuilding. I did really interesting stuff like post-Bosnian war in Bosnia-Herzegovina. So I got to see so many things. So I went out to change the world, and then the world actually changed me. And that year is what formed the basis of Topple. That is literally what formed my view of really understanding network topologies, and that's where the word Topple comes from, and connecting the most disenfranchised individual with the biggest corporation, and how do we do that? So yeah, I would say to everyone listening, and every startup founder, and any student even listening, because I know that Bryce is very affiliated with this, but never think that taking a break is not going to open up a lot of new opportunities, because that was the much needed break, and also by far the best thing I could have ever done in my life. And it just shaped who I am today. So yeah.
Amazing advice. Amazing advice. Thank you.
And I love the fact you went global at such an early age. That's another great piece of advice. Go global, go early. Right? That's a big deal, and you did it. And that's why you're where you are today.
I guess my advice would be, FinTech is evolving rapidly right now, and there constantly seem to be new technologies or sub-technologies being adopted by various institutions. Like, for example, I heard recently that there's a new technology being released that banks are now adopting that will increase the speed of ACH payments, for example. So that type of thing is something that could be innovated upon. And so I just feel like there's so many interesting opportunities out there. As long as you're constantly looking for the new next regulatory change or the new next technology change, you may be able to build something really valuable and meaningful on top of that.
So they're telling me I have a minute left. I have one more question, which I'll just ask anyways. What is your biggest and boldest prediction of either what stays the same or what changes the most over the next 10 years? If anybody has something, please say it. If not, they're going to cut us off timing-wise anyway, so it's going to get cut. But I leave it to you in case there's anything that's sort of top of mind.
I'm just going to say the continuous explosion of self-service. I mean, it's just in the virtual wave, it's just going to keep going.
Yeah, I would say interconnection. I think that's like what we've seen the last year. Like I didn't answer the VC world answer, but that's exactly it. What she was saying is I started fundraising in March and I literally was asked to move to San Francisco. And by December, I had 3 actual New York funds invested and have never met me. Right. So definitely an interesting world that changed last year. So that interconnectivity and having someone that grew up very rural South Africa even could have the exact same opportunity that I've had. I'm excited about that. Very excited about giving that opportunity to anyone.
Yeah, I would say the thing I think is going to change is the way people access and pay for healthcare going forward. I think there's going to be some fascinating innovations on that's going to change the insurance landscape in a big way. I think, but the thing that fascinates me the most is watching the companies that are going to have to migrate from this old compute environment to that built really successful businesses on big, slow, clunky data centers, and how they're going to compete with their much more nimble competitors who are able to start in a cloud and SaaS-based world, and how they can migrate. I think it will be a fascinating story to watch.
And then just to wrap up, I would say anything, my prediction is anything in the financial markets that have a tax, that tax will go down to zero, whether it's credit cards or financial advisors charging their fee. You sort of name it. We're starting to see commissions or taxes or whatever you want to call it just decrease all the way to zero.
You guys have been sensational. Thank you so much for taking some time to make this happen. And to anybody out there, please feel free to reach out to us. We'd love to connect with you all. And we are massive fans of HX Ventures. So thank you to our host for putting this event on. And that concludes our panel on the future of FinTech in Houston.
Thanks for hosting, Tim.
Thank you.
Thanks, guys.
Thanks, everybody.